What's up everyone, and welcome back to Explain the Charts. Today is October 7th, 2025, and we are doing a deep dive on Microsoft, ticker symbol Microsoft. There is a fascinating tug-of-war happening between overwhelmingly positive news and some concerning short-term price action, so we're going to break it all down. First, let's cover the news, and the sentiment is incredibly bullish from a fundamental perspective. We're seeing reports from Zacks, Morgan Stanley, and others reiterating strong buy ratings, with analysts setting an average price target around $628, which is about 20% higher than where the stock has been trading. One Mizuho analyst even called the stock free money around the $515 level just a few days ago, suggesting Wall Street overreacted to concerns about OpenAI potentially using Oracle for some cloud services. The core bullish argument is, of course, AI momentum. Microsoft's massive rally over the past year is largely attributed to its booming AI business and the incredible growth in its Azure cloud platform. However, contradicting this long-term optimism is the short-term picture. MarketBeat has noted recent insider selling, and despite yesterday's strong close at $528.57, the stock is trading down over 1% today, currently hovering around the $522 mark. This pullback comes amid broader market concerns like the ongoing government shutdown and signs of a cooling labor market. So we have a classic scenario, a potentially fantastic long-term story facing short-term headwinds and profit-taking. Now, let's turn to the charts to see how this story is playing out in the price. Looking at the daily chart, we can see the powerful uptrend Microsoft has been in for most of 2025, starting from its 52-week low way down around $345 back in April. The stock set its all-time high just shy of $555.50, following a massive earnings-fueled gap-up at the end of July. That high at $555 is the ultimate resistance level bulls are aiming for long-term. Since that peak, the price has entered a multi-month consolidation phase. A critical feature on this chart is that huge earnings gap from July 31st. The price gapped from around $516 all the way up to over $531 in a single day, and it has not looked back since. Let's zoom in on the action since August to get a clearer picture of this consolidation. As you can see, the price has been trading in a well-defined range, roughly between $500 on the low end and about $535 on the high end. The $500 level is acting as a very strong psychological and technical support zone, having been tested successfully in early September. Conversely, the $535 area has proven to be stiff resistance, capping the rally attempts in August and again just recently. Yesterday's strong move on October 6th pushed right up against the lower boundary of this resistance zone. Today's sell-off to $522 suggests that, for now, this resistance is holding firm. The top of that July earnings gap, right around $516, serves as another important potential support level just below the current price. A break below that would be a significant sign of weakness. A decisive close above $535 would signal a breakout from this consolidation and would be extremely bullish, opening the door for a retest of the all-time highs. On the other hand, a breakdown below the $500 support level would be quite bearish in the short to medium term. Now, to understand the momentum that was present just before today's drop, let's look at the 15-minute chart for yesterday, October 6th. We can see a clear and powerful uptrend throughout the entire session. The day started down near $518 and marched steadily upwards, closing very near the day's high of $531. This shows that extremely strong bullish momentum was carrying the stock into the close. This makes today's gap down and subsequent selling all the more significant, as it represents a sharp and immediate reversal of that powerful momentum from the previous day. This kind of reversal often indicates that sellers have taken control, at least for the short term. So, let's bring it all together and go back to the daily chart for our final analysis. To recap, the key price levels to watch are critical. Your overhead resistance is the top of this range at $535, followed by the all-time high near $555. To the downside, your first key support area is the top of the July gap around $516. Below that, the most important support is the bottom of the consolidation range at the $500 psychological level. So, what are the likely scenarios? The bullish scenario, which I'd give a 55% probability, is that this dip is just a minor pullback. In this case, the stock finds support at or above the $516 to $520 zone and begins to climb back towards the $535 resistance. A break above $535, especially on high volume, would confirm the bullish trend continuation, likely fueled by the positive AI narrative winning out over short-term fears. The bearish scenario, with a 45% probability, is that this rejection from resistance is the start of a deeper correction. In this case, continued selling pressure would push the price below $516, filling a portion of that major earnings gap. A break of that level would likely lead to a test of the crucial $500 support level. The likelihood of this scenario increases if the broader market continues to show weakness. The key thing to watch right now is volume. If this selling continues on increasing volume, it adds weight to the bearish case. If the selling volume is light and the price starts to stabilize, it suggests this is just a healthy and temporary pullback. Ultimately, the long-term trend is still up, but the short-term picture has become much more uncertain after today's reversal. As always, this is not financial advice and is for educational purposes only. You should always do your own research and make investment decisions based on your own risk tolerance. Thanks for watching Explain the Charts, and we'll see you next time.